Hi there everyone, I hope you're all well and welcome back to the YouTube channel. So this video here we are going to go over moving averages. What are they, types of moving averages, and also how to use them. So by the end of this video you'll basically understand exactly how to use moving averages within the market, and then hopefully maybe integrate them with your strategy. So first of all, what is a moving average? Now, in simple terms, a moving average is a commonly used technical analysis tool in the market. So it's used to smooth out price over a specified amount of time. So it makes it easier to identify trends, reversal points, support resistance, anything like that, okay? So it will usually be shown as a line on the chart, which is forever moving up and down, and we will go on to the chart shortly. So in all my previous videos, the biggest thing I get along across to you guys is that we want to build as much confluence as possible within the market when it comes to finding areas where we want to buy and sell. So if you have watched the previous, key levels, trend lines, things like that, this is just another thing to add to the mix so that you can find strong areas in the market where you can buy and sell. So the moving average itself is not going to be a singular reason to buy or sell the market, but it's a good bit of kit to have in your strategy to obviously add to that decision making. So there's two types of moving averages. The first one is what we call a simple moving average, and this basically just calculates the average price over a specified number of periods. By periods we mean days or candles. Whatever time frame you're on, a period is a candle. So what it does, by adding up all the closing prices for them candles, and then it divides it by the number of periods, okay? So if there's a 50-day simple moving average, it's going to add all the prices that closed over the past 50 candles. And then what will happen is it will give a line on the chart, which is the average price. And then you will tend to find that that price there is where price may react in the future. Okay, now the simple way to work this out, and honestly, it's an indicator on the chart, so you won't need to do this. But this is just this is what it says, like I've just explained there. So the time period is the amount of candles. How it's then made is that it adds up all the prices of the closing candle and then calculates the average based on the amount of periods. Okay, so that's a simple moving average. Now, what's the difference between a simple moving average and an exponential moving average? Now, the exponential moving average, in my opinion, is the better one to use. So this places more weight on recent price. So what it does, it calculates the average price and it gives greater importance to the most recent data. So it's a bit more responsive to what's going on in the current market. So rather than just being a very simple prices divided by periods and then you've got a solid line, this kind of usually is more weighted toward recent price action, so it's not as it's not as stagnant. It's a lot more reactive. Okay, so this can help us identify areas a lot quicker. So exact same thing. So just like the simple moving average, you will choose the certain amount of periods or candles. So obviously 10-day EMA or on the 4-hour, a 10 EMA is going to be the past 10 candles. Then what will happen is that obviously the EMA, it does put more weight towards the recent price action. So then obviously the most recent prices will affect the moving average a little bit more than obviously it did with the simple. And then what it is, calculate the EMA. This will already be done on your chart. So we will simply be able to look at the chart, see the EMA, and that line there tells us everything we need to know. Now let's just quickly look at ways to use the moving average, and then following that we'll go on the charts and just look at a couple of examples. So the first one would be trend direction. Now, are you buying? Are you selling? You can use the EMA to kind of make these decisions. Obviously if price is above or below, it could allow you to get out of the market or get into the market when you think a new trend is going to start. It can be used as support, so just like a key level or a trend line, support, resistance, it can both be used in them ways. You've got crossovers, so maybe let's say the 50 EMA might cross over the 200 EMA. That might mean something for you and the strategy, and that's what we're going to go over as well. Exit points, which I've just mentioned, and trailing the stop loss. So trailing the stop loss comes into the trend direction. If you think that price is above, let's say, the 50 EMA, and you are happy to continue buying, you might just trail your stop loss below that EMA because you're saying as long as price is above, then it's bullish. Okay, so they're the reasons to potentially use a moving average. We're quickly going to go on to the charts now. I'm going to show you a few examples of what you could use, and then hopefully then guys you're going to know exactly how to use them and hopefully make some. So guys, I'm now on pound Canadian dollar. Just want to show you some previous things which has happened with the EMAs. Now, we've got the 100 SMA and we've also got the 50 SMA on the chart, okay? The bigger the number, the more strong it's going to be, okay? So if I just, for example, get rid of the 100 EMA for the moment, you can see that price has, it's semi-respected it, but not amazingly, okay? If you then look at the 100, you can see that because it's larger, it's being respected a lot more, okay? So you can see here, it retested it, pushed down, broke it, and now it's retesting it before potentially pushing back up. So the higher the moving average, the more reliable it's going to be, but the less amount of time it's going to be hit, okay? So you can simply just say by looking at these simple moving averages that, you know, price is respecting them. You can see even, for example, here, if you go back to the key level side of things, you've got areas here, and then you've also got the moving average there. So what you could say is that price is retesting a key level, it's broken the moving average, and I'm potentially expecting price to push higher. Okay, so they're kind of the situations like that. If we look, these are just some areas that obviously have previously been traded. So just while I see this and I'm on the topic, I am currently doing an FTMO with the group. So you can see like these positions here, obviously are areas I've marked and both have worked. So if you are interested in the group and that side of it, link in the bio, but if not, it's fine. So again, if we just go and try find an example where I could maybe find some positions, like for example, let's say here, this may be good. So you've got the two simple moving averages. You could draw your Fibonacci like so, and then say, right, well, if I look here, I've got two EMAs, or two SMAs, sorry. I've got the round number of 5950, and there we go. I've got also a bit of a key level as well. So you could say, well, I expect price to push up here, and then obviously push down there. So this is an example where you could use the confluences used in other videos that I've done, just to basically find, obviously, where price is. Now, as mentioned, the more weighted towards the higher the moving average, the more reliable it's going to be. So in all honesty, I would probably look to use minimum the 100 when you're looking at the charts. Okay, so what I want to do, I now want to compare this moving average to the EMA, because the EMA, in my opinion, is so much better and so much more reactive than the SMAs. Okay. So let me just go back up to, for example, an example here. And what we can start to do is like look and see what's happened. So what happened here when price hit the EMA? We had a reaction. We've had reactions. Now, not every time there's going to be a reaction, but you can see that a lot of the time you've got break retest, you've got retest of the EMAs. And this is kind of what happens. You can see up here, price reacted off the EMAs. So all that the EMAs are going to be used is an extra reason to trade the market, okay? So for example, here you've got maybe potentially, you might say I've got a break and retest of the market with the EMA. Great, that's absolutely fine. You might say, for example, from here, if price pulls back, I've got a 38 Fibonacci, and I've also got an EMA there, so I want to buy. So you can start building up, and also as well, if we look, you might say as well, I've got a trend line. So I've got a trend line, I've got an EMA, I've got a key level as well with there. So these are just the type of scenarios where everything lines up, and it comes back to what I said about building confluence, okay? So that is what you would look at. Another thing, so besides entry points, you might have exit points. So you've seen that the past two times price hit this EMA, it's reacted. So what are the chances if price pulses back up to here, you're going to get another reaction? Well, probably quite high. So for that reason, if you're buying, let's just say for argument's sake from this area, and I don't know, you put your stop below that low, you might say, well, I'm going to target the EMA because that's potentially an exit point for me. Okay, so there's multiple ways you can use the EMAs. If we also go to the 50 EMA, I found the biggest success with the 50 EMA when it comes to the trend and things like that. But if you're just looking at a simple support and resistance strategy, then as you can see, we had resistance here, we had support here, we then had resistance again around here, price broke it, we had support again, price then came back down, you had a bit of a reaction there for resistance, same again, broke retest, you've got support. So you can see, look, price is constantly wicking in to this 50 EMA and obviously having a reaction. So for me personally, the 50 EMA is going to be the best one to use, but obviously the higher the time frame, obviously it completely depends what you're doing. So the 50, 100 and 200 is what I would personally use. I know there are people out there that use like the 9, the 28, stuff like that, which is completely okay, but for me it's just not weighted enough. Okay, so another thing that people potentially sometimes use, if we go here, is sometimes people do crossovers. So if we're looking at this market here, if I just do this, people start potentially trading the crossovers. So you might say, for argument's sake, if the 200 EMA, which is the black, is lower than the red EMA, which is the 9, then I'm only buying. What you might say is that when the red EMA is below the black EMA, I am selling. So for example, scenario like this, price breaks down at this point here. So you could say, you know what, I'm maybe selling after this, stop above the high or above the EMA, whatever you want to do, and then obviously you could hold it until price was to cross again. It's not crossed yet, so that's absolutely fine. So you'd potentially still be in the trade. So you've just got to play around with the numbers on the EMAs and what you're happy with. Me personally, I will always stick to the 50, 100 and 200, but they are the multiple ways that you can use it. So you can use it, for example, with the third touch of a trend line. You could use it with, as we saw, a key level break retest. You can use it with a Fibonacci. And then you can see all these areas start actually making sense, and then you start building confluence to take positions within the market. So if you are interested more in obviously learning my strategy and that side of things, there is a link in the bio for the content for that. And if you are looking to obviously see what type of trades I take and learn along the way, there's also the group as well in the bio. So from now on, there's going to be uploads on a Friday, a Sunday, and also a Thursday. So I'm aiming for 3 uploads a week. I'm going to try and get a lot of content out for you guys. But yeah, any questions in the comments, just let me know. But for now, guys, I will see you in the next video.